Hey there, Nick Inman from VolumeProfileTrader.com on Monday, August 27th. S&P markets in general took a little breather today, very light volume, basically half of the average volume. I have to say the sellers did, in a way win the battle today. The S&P basically flatlined, basically all indexes flatlined. But I think the point is I feel like the breadth wasn't that good. And I don't know exactly what it was, but I have to say this. Portfolio hit new highs, and then it pulled back at the end of the day. And I think that's what's important. So wherever your portfolio hit as a high today, which it should have hit new highs if you're involved in the same names I am, then you kind of use that as a benchmark. And if you don't push back up towards those levels, you may want to make sure that you're hedging off your portfolio. Tomorrow, news is pretty light. Wednesday, we do have GDP in the morning. A little more news then. Then we have jobless claims and personal income on Thursday. And then Friday's a pretty big day. You have Chicago PMI, consumer sentiment, Bernanke, and factory orders all on Friday. So I think that's the day that you're kind of looking at. And then on top of that, the following week, you have the payroll numbers. So those are all some things that you want to look forward to. But you kind of want to see how the market reacts in the coming days up to Bernanke's speech, pretty much. And what I'm seeing here on the hourly chart, and I changed this a bit to make it a little more easy to view. You had not the point of control. You had a little bit of a high volume area right here from 1411.50 to 1414. Guess where price rejected from today? Right at those levels. We do have a little bit of a U-turn, a sell bar off of those levels, but this volume was so light today, I wouldn't put too much emphasis into it. What I would do is I would look at this high volume area down here, down at 1394.75 or so, up to 1404.25. That's kind of your bogey in the market. As long as we bounce off those prices, remember, we're in an uptrend. However, you want to keep an eye going into next month on this point of control level, 1400. The market will make a move off of that level. It will either be higher or lower, and you want to take advantage of it. You want to be a part of it, and you just need to be prepared and have an action plan just in case the market turns back lower and pushes back down towards let's call it 1380, which is 20 points lower. Trust me, you don't want to ride along 2% down just on the S&P if you don't have to. So the point is, if you want to hedge up, go ahead and do that. There's nothing at all wrong with that. Just realize where we are, and pull back 20 points in the S&P. Not a big deal, especially the way the light volume has been. All right, NASDAQ continues its trickle sideways effect. That's all we're really doing. But you want to see your positions continue to do well as long as they're hanging in there. If they were positive today, that was a good thing. If they were negative, just be careful. The difference between the NASDAQ, and the S&P is the NASDAQ point of control is for the month is where we are currently trading. So we're going to get a move from off of 2760. 2780, that 20-point range. We're either going to drop down to 2710 ish, or we're going to make new highs. We're going to do one of the two. So we'll have to wait and see, and expect that going into Bernanke's speech. That should help be a catalyst. The end of the week, the news should help be a catalyst, and then next week's payroll. So realize that is setting up for a vertical move. You want to be prepared for that. I don't think that you need to be completely net long. I think that if anything, you should have a decent amount of cash that you raise, and if that means taking some small losses, that's fine. If it means taking gains, that's fine too. But the main thing is to manage your risk and basically ask yourself, okay, self, if the market pulls that back down to sub 1400. Am I okay with that? Is my portfolio okay with that? I think there's more personally speaking, I think there is a little bit more downside risk to this market, even if it means just going 10 points lower just to touch 1395. But the point is, we have initiated a few new positions over the last day or two, and we want to make sure that those are protected. Those don't turn into big losses if they do not work out, and that's what I'm preparing for. So let's go through those positions and kind of get an idea for where we're at. All right, first things first, Apple. We bought this on Friday. We talked about it, flag pattern, bam, pop up to the upside after some news. I took profits on half of this position right around these current prices. Bought Friday, sold to half today. That was a good trade. That was a solid trade. That's kind of all I was looking for. I'm still participating for more potential upside. But, when you're given a $12 pop when the rest of the market's not doing anything, it makes me want to scale down on, whatever the underlying is, in this case, Apple. So that's exactly what I did. Bristol-Myers continues to turn. I actually have a limit to take my puts off soon. If it rises 10 more cents, I'll probably get filled on a limit. We'll have to wait and see. And this was actually a really good trade. This was maybe my best trade for the month, dollar-wise, for my portfolio, because I was long a bunch of shares and then long short. I should say I was short the 33 by 30, way down here, put spread. So basically, I said if Bristol-Myers is below 33 by September expiration, I'll buy those shares at 33. And I collected $1.49 for that position, and that was somewhere sub 32. And now that position, those puts are worth 57 cents. So the position is profitable by 62%. So not too bad of a trade there. And I'm also, those long 30 puts, I bought them for 25. They're worth 5. Those are down 80%, but it's so, $1.49 down to 57, 25 down to 5. It's a huge difference, and I'm definitely making money there. So that's good. That's what we want to see. Conocophillips, this is a name that's kind of on my radar. Now this is, and I'm being honest with this is a longer term view that I'm totally okay with holding. One thing I did look at today, I think it was today, this 2-year pattern. I just connected the lows, connected the highs. What we want to see is, does this continue higher? Do we go and press up towards 59 or so on Conocophillips to test the top of this triangle? I guess we'll wait and see. We'll see what the market wants to do. But right here, right now, it looks like it's kind of falling short. We'll have to wait and see, though. Volume's pretty light. It has been for a while now. All right, I'm going to skip over gold for a second. Coke, this is a pain in the butt position, to be honest. I should have waited for a better entry, which happened on Friday, and this trade would have been profitable, probably still around profitability right now. But we are underwater on this a little bit, about an 1/8% underwater. So really not that bad, but we are underwater, and we don't like to have that. So what we're going to do is we're going to manage this position. We're going to see if these lows are defended. If they are, then we give this another try to the upside. One thing to note is, big selling bars here, but that big selling bar was on very light volume the rest of the day. A little bit of selling into the close, but we're back down to support, so we're going to see if this holds. If it doesn't, I'll probably ditch this position because I don't want to hold onto a loser. Your next stop would be down towards probably 37.50 or so on Coke. Excuse me. All right, Mastercard, new position, a small position. So what we did on Mastercard, and there's two ways to view this. The first is higher lows, lower highs, and then a flat top. Let me zoom in a little more. So we have our flat top here. How about this? Here we go. All right, flat top, higher lows, and then we have a series of lower highs right here. And I'm going to zoom back into the hourly, and you can also see this is the high for July. This is the low for July. Guess what? The low for August, the high for August are both, within. So we do have an inside month. What we're looking for here, and we'll see if we get it, is a push above this 425 level, 426, with some decent volume. If we get that, then I'd like to say that Mastercard's going to try to move higher. We want to see it hold this current month's value area low. If it doesn't, then I get a little bit concerned, and I'll probably scale down on some. I'll probably stay involved, but I want to scale down because I want to I don't want to be too involved into the market right now. If it's going to take a leg down, I don't want to be overexposed to the long side. However, I do want to stay involved. So off this year's point of control, that's what I'm looking for here. Unfortunately, it's pretty light volume, but it's been like that for the last 2 or 3 weeks. So consolidation. Hopefully we get a move soon. And one thing to point out, Visa's bouncing off its 55 SMA, and it's only appropriate to look at American Express. Also, okay, American Express kind of looks like Mastercard. Higher lows, lower highs. This looks like it wants to break out, and we just gotta wait for it. Actually, American Express looks a little better, especially if, all right, here's a trade. American Express holds 57.20, let's call it, the bottom of this high volume area. You can stay long American Express, or you can get long with your stop right around there, and your expectations would be for a trade a minimum back up to the point of control for the month of July, 58.50. And then you would love to see it get pushed towards 60, and then ultimately 61 or so, the point of control for April, 60.80 or so. That's what you'd like to see. So I'm looking for something similar on Mastercard here. All right, silver, bought this. Not too happy about where I bought it, but I didn't buy a lot. Let's go to silver futures. Okay, bought silver today, and I said this yesterday. Get involved in silver. Look for more upside. What's going on here? We're pounding up against this high volume area, which we touched today. Let's see if I can draw it. All right, we touched this high volume area today. Rejected off of it so far. A nice bounce off of this one. Okay, that looks pretty good, right? Sellers are doing what they're supposed to do. But I look at this chart, a 2-year chart, and I just see this consolidation pattern, this breakout, a point of control, this huge high volume area right here. It just screams to me that it wants to go up towards $33.40 to $34.40, $1, or about $3-4 up from current levels. That's just my perception. I didn't initiate the position in the right spot. That's why I bought small, and I hopefully you did catch that I said I'm buying small, hoping for a pullback and trying to get more involved there. Similarly, gold, actually this is a position that may need some maintenance tomorrow. Top of the high volume area, you're getting rejection. That's what you'd expect. However, it's on pretty light volume, so that's not a bad thing. As long as we hold 16.25, the point of control for the year, you're okay to the long side. If we drop below that, then you have a little bit of concern. If it can base higher, say 16.50, have a few consolidation days, and then continue higher, that'd be even better. Obviously, whatever Bernanke says is going to have an influence on gold, silver, commodities in general. Usually does, and it should continue. All right, the one trade that I really got right today, well, besides the Apple one, but that was a little bit of luck. Oil, I did say look for a sale in oil. Oil did give you a nice sale today to the downside. I was going to use USO. The target would have been 34.50 if I remember right. Got 35.14, so that's not too good. But this was into that kind of weakness. Just personally, that would have been the kind of trade that I would have taken off the table. Just because we were trending higher, it's just kind of a quick fade, and you look to cover your position into weakness, especially once you see the buyers coming in. So yeah, that's oil. The euro, consolidating here. Let me fix that. Top of this range here. Let's see. Probably talked about this 125 level. As long as it holds, you're okay to the long side. If it doesn't hold, then you will reassess, look for a short back down to 123 or 123.80, 123.50 or so, that range. We'll have to wait and see. I keep saying Bernanke because the end of the week is really what matters. So the important thing, in my opinion, is to raise some cash. For example, if you took the Bristol Myers trade, it's in the money. It's a great trade. It worked out great. Take some profits on that. Scale down a little bit. Coke, if it's not behaving well tomorrow, maybe take a third of that position off for a small loss. Mastercard, if it breaks these lows, let's say you can have two stops on Mastercard if you want. One below this swing low. Let's see, 14, 16, 49, whatever. Somewhere below there. You can also have one right below the value area, maybe 14, 19, 50, right under this bar from today, right under the value area, right under this high volume area. Therefore, you're just managing risk. It's okay to take losses. It's okay to not always be right. But the important thing is to realize you're not right, get out, take the small loss. You can always get back in. But you cannot, salvage a loss if it keeps going against you. So keep your powder dry if you have to until Friday. There's nothing wrong with that. I'm probably going to do a little less trading just because today wasn't the price action that I wanted to see. If we continue to move higher, I would be happy. But the fact that we struggled, and there's nothing wrong with struggling against, a volume level like this. But the fact that we just got basically one positive close within this range and then a rejection, a little bit of weakness into the close, gives me a reason to pause and reassess the situation. Similarly, with like the gold spread, 164 by 164 by 167 on the GLD, it's down 10 cents, which isn't a big deal at all. But if gold continues to pull back, there's no reason. It's right now, it's trading 1662, right here. This range. If it continues to pull back, why be a part of that? No, thank you. Taking profits on, taking this small loss on this call spread and then reducing my risk on gold. What I'll do is I'll look to re-add on weakness. I'm not letting profits come back in my face if they don't have to. That's what this trailing stop is here for. So you don't have to take that, and you shouldn't have to. It's part of your job is to take profits when you're supposed to. And this may be a situation where we have to take profits on gold. We may have to take some small losses on some equity positions. But for the month, it's been a really good month, and we want to finish out strong. So if finishing out strong means closing out some positions for small winners, small losers, break-evens, fine by me. It's part of the game. So anyways, take care, have a good night, and I'll talk to you tomorrow.